Hi everybody. I have just for some time now I've not recorded any video, right? And I just wanted to drop something for you all. How's it going? Um, so I've been working on a couple of projects that kind of made it seem like I've not been around. I've been away, but I'm around. Very much around. Just completely engaged in our new project. But I've been thinking, what do I do to just help some of you struggling and stuff like that? And I wanted to record this video, right? I don't want the video to be long. I want it to be like a 10-minute video. So I'm going to be challenging myself to kind of drop some nuggets here um, for 10 minutes for the things you need to consider as a beginner trader. Now, if you can master these things here that I have here, yeah, you will do well. So all the struggles you're having in trading is simply because of not having a clear understanding of these eight concepts I have here, or eight things that you have to consider. Um, Anything else is noise. And like some of you know, I've been trading, I've been training for over a decade now. Um, so when I say to you, I've tried everything, I've checked everything. Tell me of a trader that is making waves now. I have actually gone to every single one of them. Those that I trained, those that I didn't train, those that are training others, and I've gone to look at the content and stuff like that. And I want to tell you that everything boils down to the these eight approaches to to the market. You've got to think about the market this way. And so hopefully I should be able to record this just in 10 minutes, and you'll be able to pick up a few things. But just know that this sets you on a path. And the problem people, one of the major problems people have is when they don't have a framework to actually handle their understanding. So if you're going to learn how to trade, you need to follow a sequence, right? Someone who wants to be a mathematician must first of all learn how to count, then learn how to add one and two, and then you can start going into some heavy advanced mathematics, right? So if you don't follow that sequence, you will struggle and you may never ever get to where you desire to get to. So let's get on with it. And hopefully you can pick up one or two things. So the eight things are this: OHLC, which I call the four parameters of price, and then you talk about moves, then you talk about price action, structure, and P&D concept, which is premium and discount concept, execution, and then you pick up psychology and risk management. Right. So those are the eight things. Know these, have peace, and have good results. All right. So let's go. So OHLC simply means the four parameters of price. So open price, high price, low price, close price. And in 2024 now, most trading platforms and most trading approaches will use the candlesticks as ways of representing price. But the other ways of representing price, you have the bar charts and you also have line charts. But the most popular and one most people use in 2024 now is basically the candlestick pattern or candlestick uh, uh, drawing representation of price. And that's what contains the OHLC. So every single candlestick has the OHLC. It has the open price, it has the high price, it has the low price, and the close price. So the candlestick looks like this. So this is what you call the body of the candle. And then these lines here that come out here look like the wick of the candle, but it looks like burning the candle in two ends, right? So you have a wick at the top and you have a wick at the bottom. The end of the wick at the top is the high price, and the end of the wick at the bottom is the low price, right? And then this bit here is the body of the candle. For a bullish candle, which is a candle that opens and closes higher than where it opened. So in this case, it closed higher. You can see that's why the arrow is this direction here. So closed higher than where it opened, and then the opposite is the case for a bearish candle. So a bearish candle is one that closes lower than where it opened. It still also has the high price and the low price. Right? The moves. So we've talked about candle. Now you find out that on a chart you have a combination of candles. So where you have two or more candles, so bullish candles in the same direction. So in this example here, in this screenshot here, I have a bullish candle, so the close price is higher than the open price. You have the high and the low. Then the next candle that opened and closed higher than where this one opened, so it's also a bullish candle. Now you have a bearish candle, but that bearish candle did not continue going down. Then you now get all the bullish candles. So you can see we have a combination, so a coming together of mainly bullish candles. That is what is called a move, right? This is not a trend. Now, on this particular time frame, on this frame we're looking at, this is not a trend. This is just a move. So a collection of bullish candles going in the same direction. So ultimately, all price is doing is closing higher. So at this point, the close price is here, and where it started from was there. So it has closed higher than where it's open. So it's a bullish move. Then the opposite is the case for bearish moves, where you have a collection of bearish candles coming together, and when you see them, when they come together one after the other, even though you have some bullish candles in the middle, a few of them here, you still have mainly just bearish candles. And what do you notice? Price is going down when it's doing that. So you have a bullish candle, you have the bullish candle, you have the bearish candle, you have the bullish move, you have the bearish move, right? So price action. Now, what do you notice here now? You now have a combination of moves. So we had the candle, we had the move. So you have this as a bullish move, right? Then you have these two or three candles, two or more candles, bearish move, bullish move, bearish move, bullish move, bearish move, bullish move, bearish move, bullish move, and so on and so forth. And what do you notice? When you have, you know, combination of moves, but that combination is heading up. This is what people would typically call a bullish trend. But the definition of a bullish trend is where price is making higher highs. We'll talk about that briefly in a short while. So this is a high, this is a high, this high is higher than this 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 high. So price is making higher highs, and then is making lower lows as higher lows as well. So that's a low higher than that low, that's a low higher than that low, low higher than that low, low higher than that low, and so forth. And the opposite is the case for a bearish trend, right? So where you have a bearish move, then a bullish move, bearish move, bullish move, bearish move, bullish move. So again, in this case, you're having a lower high and lower lows, right? Very briefly, very simply, that's what you call a trend, right? But indeed, this is price action. This is how price actually moves. Price ebbs and flows. Price does not move in a straight line. It waves. It ebbs, it flows. So that's what we're getting here. So price went down and went up, went down, went up, went down. But in that case, it is going up. Here it went up, went down, went up, went down. And in this case, it's going down. So that's price action. That's the behavior of price. That's how price moves. You've got to see that on the chart, right? Um, then structure. So you move from that to structure. What do you notice when price, this move got to this point here and stopped? It is possible that this move will continue going up like this, but it didn't. It had to stop. It had to flow back, right? At that point, it stopped, is what is called structure. So price structure here. So it came back down. Then it did not continue going down. It turned back up. And so what do you see here now? We have a structure there. Then we had a structure down here. And then price moved up and went above the structure. This is what is called breaking structure. So price has moved above here, broke the structure, and then came back down, but did not break the ones on the bottom, right? So what do you notice? That when you have a bullish trend, price is constantly breaking the top, the highs, right? That's what makes it a bullish trend. So it's constantly creating higher highs. That's why it's a structure. So you can see that just continues in essence. I didn't draw it completely, but the reality is this is another structure here, right? That's That's another structure there. Then that's another structure there. Then there's another structure there. And you see, so that's how structure. So go to your charts and you can see these things there. Same thing with the downtrend. This is a structure here because price went up and then did not go beyond here and then came back down. Then when it was coming down, it stopped here and then pushed back up. And then when it pushed back up, it never really, so we can actually pick up this entire one because it never went below here. So we can pick up this entire one here, the highest one here. So it went back up here, and then came all the way down, right? And this is even a small structure down here, right? And then you have another structure formed here. Can you see that? And then it came all the way down, formed another structure here. So forth, so forth, so on and so forth, right? So that makes sense, right? So that's structure, um, as it were. Remember, I'm not teaching in depth here. I'm just trying to say to you, you've got to consider these things. You've got to know these things. You can either, and I'll give you the opportunity here, if you're not yet signed up to the 5TT Profit Club, this is a time to do it because we break some of these things down in details. And I have weekly calls that actually help you to even understand this further. But you've got to know that you've got to find out about this. Forget all the noise, all this looking for indicator, this indicator, that EA, this EA. I write indicators myself. I code EAs myself, and I'm telling you, without these, no matter what you seek and no matter what you chase, like fleeting shadows, or butterflies that fly away, you will never get better at trading unless you understand the concepts I'm talking about here. Okay, so that's structure. So for price to continue going up, it has to keep breaking this top highs here. For price to continue going down, it has to keep breaking these lows here. Does that make sense? Right? Okay, so the next concept that you've got to actually take seriously is the premium discount concept, right? So let's assume that this is a move up here. So remember, that's a move, so it will have multiple bullish candles, maybe one or two bearish candles, but it's multiple bullish candles. And it got to this area here and it stopped. What's this area called again? If you remember, it is called structure, right? And so it got to this point here and it came back up, right? So remember, for price to continue going up, right? It has to be taking out the highs. It cannot take out the low. It has to continue to taking out the highs. So for this price to continue going up, it has to now move from somewhere as it keeps going down, stop somewhere, and then it turns and starts to go up. Now, herein is the if there's any what you call this thing now, holy grail to trading. That holy grail to trading is to be able to know when price will stop. When it starts going down here, you know when price stops here. Right? Because if you know when price will stop here, you can now buy from here to there. Now, why will you buy from here to there? Because you want to buy low. You remember when people talk about buy low, sell high, all those kind of concepts. In reality, we're talking about discount. What you want to always do is to find the, the most discounted price level and buy from there. So the most discounted, most probable price level, right, to buy from, and then you buy from there. So every strategy or good strategies will be strategies that find the most discounted price action based on certain rules to allow you to then buy from that discounted point so that you can make the most money as price continues to go up. Now the opposite is the case for a downtrend, right? You have this here. So price a move, a bearish move, then you have a bullish move come up. But for this price to continue going down, it cannot come and take out this high here. It has to take out the low. So for it to continue going down, it has to come like this, right? And then if you were going to, where do you sell? If you're going to make money, remember you buy low and you sell high. You buy discount and you sell premium. So you want to find the highest point price will get to before it starts to reverse for you to sell, and that's your premium. So where is that premium? That premium, it can be here. But if I'm going to follow price action on price is going to continue going down, it means that price will not take out this at least temporarily. right? So for me to sell, I have to find the premium price, right, on this move here that allows me to then sell, right? And so when that happens, I can follow price to the downside, right? Yep. Are we still how are we doing for time? We're slightly above 10 minutes now, but yeah, it is what it is. So that's premium and discount. So premium is you've got to find on a bearish move. So here it is. On a bearish move, when price stops and now starts to move back up, that is what is called a pullback or a reversal, right? Providing is a temporary pullback, providing is a short-term reversal, right? It cannot take out this high. So what you want to find is you take this bearish move. This bearish move now forms an area. What you want to find then is the highest point on this move down here. You know, what I mean by this move down here is from here, from this high point to this low point here, right? You want to find, so if I'm looking at this whole distance here, and if I'm going to measure this distance, this is the distance we're talking about from here to here, isn't it? Right? So if we're going to measure this distance, 50%, anywhere above 50% of this distance, premium, because it has to be above 50 to be, you know, selling high. Does that make sense? So anything above 50, right, which will probably be around here, will be the best place to sell this instrument. So as this price came down, then we had a pullback. We follow this pullback until price gets into discount into premium level. So when you look at this, this will be the premium area of that move. You know that move there? That will be the premium area of that move. And this other one here will be the discount area of that move. You do not want to be selling at discount. Sorry, you do not want, yes, you do not want to be selling at discount. You only want to buy at discount, right? If that makes sense. So you have to wait for this price to pull back away from discount area to get to premium before you sell. The reverse is the case with this. So if I'm going to look at this move here, so this bullish move here, so the question would then be, only if price starts coming down, you don't want to be buying here. You shouldn't be buying here because this is premium. If you look at this move from here to here, so remember, what are we looking at? We're looking at this low, the lowest point of that move, right? And we are looking at the highest point of that move, right? And we're saying to ourselves, where is premium? Premium is everywhere above 50% of this distance here. So this distance here. So 50% of this distance here, which will be probably somewhere around here, right? So what we want, we cannot buy anywhere that is 50% or above. You get, because you have to buy at discount. So you must wait for price to then come all the way back down here. You must wait for this price to keep going, keep going, keep going until it comes somewhere below 50% of this move here, which will be represented by probably something like this, slightly more. So something like this. That's your discount area. So as long as this price is coming down, it's coming down, coming down, coming down, coming down, comes within this area. So anywhere within this area here, relative to this up move, is where you want to now buy. And then when you buy, you're buying a discount that allows you to then follow this move to the upside. And that's where you make the most money. If you buy around here, you cannot make as much money as you buy around here. Right? So that's the premium and discount concept. No detail here. Now, execution would then be, once you've determined where your premium levels are or discount is at any point in time, you can now decide on when on buying and selling. So you have to now have the rules that then say, if this happens, that happens, that happens at discount level, I'll buy. I'll only buy at that level. If this happens and that happens and that happens at premium level, the only thing I will do then is to sell. That's it. That's how you execute, right? And then psychology. Psychology is everything is built on psychology. So for you to follow what I have just said now, right? It is going to rise or fall on psychology. To believe what I have said now, that that's all you need to succeed in trading, is going to be based on how well developed your mindset in for trading is. The psychology is what is going to determine that. But then the only way to keep developing your psychology is simply by getting more knowledge and by practicing what you learn. Those are the two things that build confidence. And when you build confidence, confidence allows your psychology, your mindset, to develop. But you've got to learn, you've got to get new content, new knowledge, new theory. But then that's not enough. Knowing theory is not enough to give you confidence. Knowing theory is not enough to kind of start shifting your psychology. You know the theory, then you also need to know the practice. You need to do the practice. You need to, take what you now learned and put it into practice by going into the market and trading, right? That's where psychology comes in. Again, we have all these things in the members portal on how to support you in the trading. And then the final thing I'll talk about will be risk management. Now, this is the other thing that also kind of frustrates new traders, right? So there are two ways to look at taking profit in the market. You can either have trades that have high probabilities for results. So in reality, it's a trade-off between high probability trades and reward to risk ratios. What do I mean by that? Um, if you've got to find high probability setups, and sometimes it takes forever to find those high probability setups. Um, but when you find them, the reason why they're high probability is because they give you results, right? But it can take a long time to find them. Um, the challenge with that is you have to when you get those high probability setups, it doesn't necessarily and it doesn't also mean that you win. By the way, there are no guarantees, but they're high probability. So when you find them, you can win with them. Now you've got to merge that with what I call high reward to risk ratio as well, right? So if your probability of success on each trade you take is 70, so for every 10 trades you take, seven are profitable, right? If that's the case, then sometimes you won't get high reward. In fact, most times you won't get high reward trades at a 70 um, um, probability. You wouldn't. It's just the market doesn't work that way, right? So for you to get high reward to risk ratio trades, your probability will drop slightly. So your win rates will drop slightly. And there's nothing wrong with that. Now, if I have a probability of success of about 40%, and I have a reward to risk ratio of 3 to 1, I will be doing so well, much more than someone who is trying to get 100% probability, right? And only maybe 1 to 1 or 0.5 reward to 1 risk, right? I will do better than that person. It's fact. This is maths, it's numbers, right? But new traders sometimes don't believe when they are told this is fact, and so they try to find out for themselves, and some of them then don't recover from from the consequences of going off and trying something you were told not to try. I heard Jim Rohn sometimes, one of my mentor stars, my mentors. He will always say if someone said to him that this egg is rotten, that he's not going to try to taste the egg to validate that it's rotten. Like he would take the person's word for it because I don't want to taste rotten egg. Why do I want to have that experience? It's not an experience. It doesn't make me money. Why would I want to, you know? So it's the same thing with trading. Certain things I say to you now that some of you might say is just what you think and you want to go and try it. No problem. Just go try. Is your time you will waste and your money you will waste to go try those things. But you've got to take it for what it is. The experience I've gathered over the years doing this, um, and also training other people, and kind of multiplies the experiences because if you're training people and they are having their experiences, those experiences are also yours because if they are sharing it and you're seeing how what they did to get to that, So it's huge. It's huge. So when I say to you these 8 things, consider them and do them. And that's what is really key. So I plan to do this for 10 minutes. I've ended up doing it for 20 instead. Yeah, you got to bear with me, but those 8 things, you've got to consider them and make sure you then learn. I've just touched on them. I did not necessarily teach, right? I just touched and talked about them. So for you to now know how to to build some flesh around what I've just told you, you will need a mentor. You will need to, it's either you go look for free stuff, which I can guarantee you will not give you all the information you need. You still need a mentor. You need some guidance to be able to then hold your hands, even if you're looking for every other thing. A guide allows you to just focus on the right things. So reach out to us somewhere in this video here. Go to our website and reach out to us by message, and let's support you through that process. Okay. All right. Until next time, you take care and just keep trying. Don't quit.